everybody. Hi, everyone. Happy Friday. And this is the weekend episode of VCTV. As I say it, I request all of the speakers today to put themselves on mute so that I don't hear myself talking. Thank you so much for that. So this is a very interesting panel and an interesting topic for me. So I haven't actually moderated or hosted SPAC so far. So that's why I'm very excited to hear from you all about SPAC investments. Because SPAC is the buzzword, like buzzed from 2020 up until like cryptos, SPAC has been making a lot of noise. So let's just hear about what is SPAC, why did it make so much noise in 2020, and what's happening in 2021. So 2020 was a year of the special purpose acquisition company, or the SPAC for short, with more than 200 going public last year alone, which was 2020. What accounts for the recent SPAC boom, and what can we expect in 2021? So there you go. That's why we are here to discuss all about SPAC. A little bit of introduction about myself. My name is Sunny Mohanty. I'm the Regional Director of LATOKEN based in Singapore, and I host VCTV, which is a venture capital TV. It's a platform to connect investors with entrepreneurs. It's also a platform to educate startups about the different types of investment strategies that we have, different types of technologies that we have. So there we go. It's the Friday episode of VCTV. So guys, all the viewers, chill out, have fun. We're going to talk about SPAC that made a lot of noise in 2020, and we're going to know what's happening with SPAC in 2021. Okay, so my name is Sunny Mohanty. As I said, I'm the Regional Director of LATOKEN. I host VCTV. That's me, that's VCTV. Let's just go into our speakers today. Okay, who do we have today? Yes, all smiling, happy faces. Love to see you all smiling and happy, and it's a Friday. And let's just make a Friday a little, fun and not very serious, even though SPAC is a very technical topic when it comes to investments and everything else, but we try to make it fun as well. Okay, that's the beauty about VCTV. Okay, who do I have today? So I have some new faces. I have a new face today. Let me just start with him. Hi, Julio. Hi, Julio. Welcome to the Singapore episode of VCTV. I say that because I am based in Singapore and I host it on Asia time zones. So welcome to VCTV Asia, or you can say that. Let's have a quick round of introduction and background about yourself.
Thank you. It is nice to see some familiar faces, but it's lovely to meet you. I am in New York City. So right through this window there is Manhattan. I'm the managing partner of New York Bay Capital. New York Bay Capital is a combination of advisory firm and investment firm that we run here in New York with a specialization in emerging markets. We invest around the globe, but particularly in Latin America, although we welcome meeting people from all over the world and putting some capital to work in interesting projects. The reason we participate in these fantastic VCTV episodes is because we have met very many interesting people and companies, and so we've been able to help them with capital and sometimes with some ideas.
Wow, great. Good to have you, Julio, on my panel, and I hope to see you. I hope you can wake up a little early. We have Gary and Raghu as well joining from the same part of the world. I'm going to take the introductions soon. Let's go to, thank you so much for joining me on this panel. Really, really appreciate it, and happy Friday. Next, I have on my screens, I see Karthik. Hi, Karthik. Happy holiday.
Hi. Thank you so much, and it's a pleasure once again to see all of you this afternoon. I represent the Middle East, a couple of family offices in the UK, and a venture fund based out of Saudi, primarily into the health tech and edutech space. I've been toying with the idea of participating in the SPAC deal for a while, but the family office that I represent is a little too conservative, and for right reasons, they choose direct investments into the business and want to maintain certain levels of control. So till now, we've not been able to make up a mind for last 1.5 years, but a fabulous space to be in indeed. Thank you so much.
Okay, and welcome back, Karthik. Good to see you back on VCTV. Next, I have on my screen Raghu. Hi, Raghu. How are you? Happy Friday.
Hi, Sunny, and thanks to LATOKEN and VCTV. I'm from Princeton, New Jersey. I'm a serial entrepreneur and strategic advisor. In the SPAC space, I'm specifically looking at it through advisory role in several funds. And it's an exciting place with about 100 billion waiting to be, companies are looking for targets to deploy. So.
Wow, interesting. Thank you so much, Raghu, and welcome back on VCTV. So we have another New Yorker from on VCTV as well. Next, I see on my screen Gianpaolo Parigi. Welcome back, Gianpaolo. How are you today?
Hi, Sonny. Welcome, everyone, here on LATOKEN TV. And this is Gianpaolo Parigi. I'm a venture capitalist, a serial entrepreneur, private equity specialist with ACC, private equity group out of California, and the chairman of a single family office in New York. At the private equity group, we are currently eyeing a couple of transactions that might involve SPAC dealing. So very happy to discuss, what we could discuss today about this, addition to the financial structures. Very good. Thank you very much, Sonny. Back to you.
Perfect. Thank you, Gianpaolo, and happy to have you back on VCTV. Last but not least, happy Friday. Welcome back, Gary. How are you today?
I'm good. How are you today?
I am happy, very happy. I just finished up one show on a Crypto Friday, Ask Me Anything, talking about a blockchain, very technical into a blockchain episode of VCTV. So I'm all charged up.
You're electrified. I think you're ready to go bike ride. You got that look in your eyes.
Oh, yes, for sure. I'm going to see me on Facebook.
Yeah, exactly. So it's great to be here. Great to see some smiling faces and some friends. My name's Gary Fowler. I've been involved in 17 companies, 2 unicorns, original management team of Click Software, sold to Salesforce for $1.35 billion. It was an Israeli-based company that was brought to the U.S. And also Eva.ai, an AI HR tech company that I co-founded 5 years ago. I love artificial intelligence and quantum computing. Write a lot about it. Just published another article about cybersecurity and decentralized cybersecurity and the impact and quantum. So it just came out in Forbes a couple of days ago. So check it out. I am the CEO, president, co-founder of GST Get Shit Done Venture Studios. We are a premier AI and quantum venture studio located in Santa Clara. And Raghu and I are working on a project together, SplitByte.
Yay! SplitByte, I know that. Great, fantastic. So we all set with the introductions of our speaker, and today the topic actually is which companies are great targets for a merger with SPAC. But before that, let's just understand what is SPAC. So what made 2020 the year of the SPAC? I mean, obviously, let's start with that. So I like to start with Julia, who just joined this panel for the first time, especially the VCTV. Julia, what made 2020 the year of the SPAC?
Well, many factors. Many factors are responsible for the popularity, once again, of the SPAC. It's not new. SPAC stands for Special Purpose Acquisition Company. It's any company that also called blank check companies. They're pre-authorized to be listed in a stock exchange, even though they don't have a business. And so, but they have cash that they've assembled from investors. A management team gets together, they organize the SPAC, they convince the investors to back them, but it's a funny way to back them because they don't know what they're going to do at the time they back them. In many ways, it's like investing in a fund for investors, a private equity fund or a venture capital fund. You don't really quite know what the management is going to do with the money, but you trust the management and you hope that they're going to do something good with it. So the management then has the responsibility of going around looking for a potential acquisition, and when they find it, then they already have a listing. They already trade. There's a few steps that they have to take in order for them to complete the acquisition and truly begin trading. But at the end of the day, it's a faster and hopefully cheaper way of attaining that public status, that ability to trade in a stock exchange. So why was 2020 the year of the SPAC? I think maybe in part everybody was sitting at home in the pandemic, and SPACs lend themselves. There's less of a roadshow involved. To go public typically requires a roadshow. And one of the interesting things about SPACs, even though the roadshow happens anyway, is that it's lent itself to sort of a approval by Zoom, because companies have already gone through, or investors have already gone through the process of getting to know the management first, and then the management can then do its due diligence, and there's more of a trust factor created already, and that allows, I think, for an easier. There are fewer questions that need to be asked and answered, and I really think that the fact that everybody was sitting at home over 2020 enabled, to some extent, the popularity of the SPAC. There are other reasons, and most of them very good ones. A SPAC, it allows institutional investors to play a little bit more in venture capital. Before SPACs, companies could not use their financial projections to talk to institutional investors. It was somewhat of a taboo, and sometimes, frankly, against regulation, to allow companies to use their financial projections to market a deal. But in a SPAC, there's no such restriction.
Right.
So when you're out there selling your financial projections as opposed to your actual performance, then you're allowing institutional investors to play VC, to play that, to make those bets. And venture capital is very popular right now. Technology has really taken over the market. People want to be invested in exciting growth companies of the future. And that rule, I think, has really attracted the institutional base to participate. And so it has made SPACs bigger. It has made SPACs have bigger blank checks. That's my 2 cents. I don't want to, there are other reasons, but let's let some of the other panelists chime in.
I think, Julio, the key point for me was from your opening remarks was everybody was locked down in 2020. That made SPAC what SPAC is today. But obviously, I'm here to know more about SPAC from all of you today, because I don't have much idea about SPAC as well. I keep on hearing it, but thanks for those opening remarks, Julio. Nicely explained. Gianpaolo, over to you. So what is SPAC, and what made 2020 the year of SPAC? You are I think you are on mute, yeah. Okay, I think he's gone. Karthik?
So, pandemic opened up a lot of doors, Sunny. That all of these businesses, all of these trends, all of these phenomena always existed. But 2020 opened up more reasons for them to come into vogue. Too many startups, too many businesses in need for money, too much growth that needed to be built, too much capital on the fence that needed to be filtered into the business through the right route, with a very strong route to market backed by valuations, created a reason for SPACs to come into the fray once again in terms of a special purpose or a vehicle that would channelize funds. Pre-IPO route, non-IPO route, easier route to market, faster valuations instead of a private trading, getting a virtual public platform that would allow for secured investments, and along with a multi-channel venture fund or a multi-channel crowdsourcing, which de-risks from the sponsor's point of view. It also created a platform for the businesses to get access to not only capital, but along with capital, very strong management, very strong leadership, and a very strong execution finesse is what brought SPACs in. So while SPACs have always been in vogue, the reason why 2020 opened up is because there were far too many unicorns that needed to be built, and far too many startups that were looking for funding, which primarily couldn't have been evaluated through venture funds or investment opportunities sitting across the world. So one blank check or one virtual listing market created an opportunity for all of them to be funded or reverse merged into a SPAC primarily, and that's where I see it. Again, the success of the SPAC, the valuations, while the industry is booming, the valuations of the SPAC or the listing values of the SPAC haven't been too successful for people or businesses to continue it in the future. So how does it go, and where does the merged entities grow in the future is something that's open for all of us to discuss.
Thank you, Kartik. Thank you so much. I think we all are consistent in one thing, because last year we saw a lot of startups towards the unicorn route. So yes. Next, I see John Paulo. Are you back?
Yes. I was actually listening to you, but I could not unmute myself for some reason, so I missed my turn. I apologize. Well, I mean, SPACs have been around for quite some time. Actually, they're nothing new in the market. They're just one of the other arrows that we have in the quiver in corporate finance. I'm hearing myself. I don't know if there's someone who's on mute. And anyway, as I say, they have their own merits and their own pros and cons. And companies that are approaching raising capital indeed may consider it, but I think it would be important to take a look at what really the SPACs want, because they own the capital already, as some of my colleagues have already said. And I think it's important to determine whether or not a company raising capital is the right match for this type of vehicles. SPACs are looking for, household names, are looking for brands, are looking for predictable free cash flow, are looking for companies that have already a certain size and need business restructuring. They are looking for companies that can address very substantial retail markets. So it's a good thing to investigate a little bit the market from the SPAC's perspective, and see if our company is really in line with the, I would say, mainstream expectations of most SPACs, because anyway they are diversified by industry, by geography, by phase, but they're not looking for just target. They're looking for targets with very specific characteristics. So in this respect, I think that for an average startup, it is nothing new under the sun. Looking for capital will remain difficult, and the SPAC probably do not change the universe of reference of a small startup. But if this particular startup has got some very unique technology, intellectual property rights, contracts that have been signed with rated clients, or access, verifiable access to a large consumer market, then okay, this particular startup may have a visibility in the SPAC universe. Otherwise, I would definitely recommend for particularly small technology startups to look elsewhere, because I don't think that the SPAC is right there for them. At least this is my view. Most of the SPACs deals are in the middle market, if not in the large cap tickets. So there's very little to be had for companies that are on the up ramp, and they need investments, but they need different type of capital. Again, I do not rule out, and it does happen sometimes, that also very weird marriages happen. But if I were a startup entrepreneur, I would be extremely careful, about venturing on this. Thank you.
All right. Thank you, John Paulo, for sharing your insights about the benefits of SPAC and the pros and cons, actually. Raghu, over to you.
Yes, I think Julio did a very good job of giving all the aspects of the SPAC that we have to consider, and that is great. I think one of the things that you have to look at is the governance. Companies that are ready to go public, but see, they don't yet have the full management team to do the kind of governance you need once you go public. Or I think good target companies, because they can utilize the management team from the SPAC. I mean, you have to look for a match. It is not. It's both ways, right? So I think the SPAC funds also look. They have specific targets. Other mostly revenue positive companies were the ones that were targets, but now more of the growth companies, especially in areas like biotech, which are a lot more based on kind of forward projections as opposed to performance, because most of the innovation happens in the early stage, and there's a lot of money needed for discovery, and then the larger pharmas come in to kind of do the regulatory process. So those kind of companies are actually, biotech is a good target in one area. Consumer companies, B2C. So I think it's really, I think pretty much you can do it for all different companies. Now there are so many SPACs waiting. SPACs have been popular for the last 3 years. I mean, I think more than 10 SPACs happened in 2013, and then about 50 in 2018. And then the last 2 years, it's kind of exploded. 2020 had more than 100. And I think that partly was due to the pandemic. I think partly, I think it just was a trend that was, going up, and it kind of pandemic just accelerated.
Thank you so much. Besides digital transformation, pandemic also accelerated SPAC. Thank you so much, Raghu. Next, I have Gary.
Can you hear me, Sunny?
Yes, very clear.
All right, great. So I've written several articles about SPACs. They're very interesting, and I've been early on involved in some SPAC-like activity in the early 2000s. But I mean, let's think about it. Think of the way traditional companies grow and mature. They raise money in VC and investment, grow the valuation, reach a point of maturity, and typically have an IPO.
Yeah.
But we are, as Julio said, Raghu said, Karthik said, the world's really gone through a pandemic, and the global health crisis has shaken most of the company's projections and really their hopes for having any type of an exit. So what's happened is we need a way to be able to get out the door, and plenty of investors really want to push in that direction. So what is a SPAC? It's really a collaboration between investors and sponsors. The founding members of SPACs are experts in particular industries, and they form the SPAC. So, in a nutshell, Forbes said that a SPAC basically is raising money through an IPO and use those funds to acquire an existing company. But the key is you got to do it within 2 years. You cannot wait. So it's a 2-year process. So, in reality, though, the IPO process for a SPAC, and I've been through an IPO, a NASDAQ IPO, the IPO process is not that much different. So you've got meetings between the SPAC team and other parties for the deal. The whole idea is really, come to a conclusion where we each have an offer and all parties are involved and interested. They've been around a long time. It's the one thing right now is that some of the challenges there are a lot of SPACs out there. It's whenever you have a new market, everybody starts jumping in, all kinds of things happen, right? There's tons of them coming out. People start getting confused about what's happening. But let's go back to the fundamentals. What's really going to matter is who the management team is. Do they have the kind of credibility to pull it off? Are they the right people? The same things, right? Is a target company, the company that they're going to acquire, is it the right kind of company? So, we need to get down through, and there's no really maximum size for a target company a SPAC's going to buy, but there's really a minimum threshold. So look at it. A target company is really 80% of the total fund of the SPAC's trust account. So you have a trust account, 80% of that. At the same time, there's some rules about, NDA and identifying who that particular company is. Well, the other thing is SPACs are really looking at target companies that are 2 to 4 times the funding they have. So typical SPAC, what, 250, 400 million. So 2 to 4 times that amount. I think, from my standpoint, I'm always cautiously optimistic. Again, if you've got the right team, you got the right target company, they should have been doing an IPO anyhow, and you've got the vehicle, why not? So I would go back to basics, right? I always look at revenue. Are they producing the right kind of revenue? And do the optics look right? That's it. So, SPACs have been through a history of ups and downs, of successes and failures, advantages and disadvantages. However, right now, they're a great way, a viable way to direct investments into industries and companies for those who really find the traditional markets really unacceptable. So, we got to be careful about the hype. Sometimes the hype overbuild things, and you hear the bad stories, not the good ones. But I think it's a great opportunity for the right companies.
Perfect. Thank you so much, Gary, and with those opening remarks. I mean, in continuation of just what Gary said and others mentioned, SPAC has been around. It's nothing new. But I would like to know, and probably our viewers also would like to know, what are the key differences between SPACs of the past and those of today? Julio?
It's hard to do an exhaustive list, but I think if you look at examples or interesting cases, one of the first SPACs was a company called Jamba Juice. Certainly, people in the United States know the brand. It was a chain of stores that sold juice. You'd walk in, and you could get delicious orange juice and other kinds of juice and juice mixes. And if you were thirsty and you found the Jamba Juice on a hot day at the mall or in the street, you were very happy. So Jamba Juice was one of the first SPACs. And now, let's look at some recent SPAC. As the speakers were explaining a little bit about a SPAC, I thought that there's a new industry that has come up in the last couple of years. It's space, right? Lots of investments are now going into space, satellites, transmission, rockets up in the air. I mean, it's a brand new industry, which when Jamba Juice started, didn't even really exist as an industry. It was the area of NASA and governments, and it cost way too much money to put a rocket in space, and definitely pre-SpaceX and all of the new private companies. So space actually, SPACs are having a major role in the development of space. Look up, for example, let me think. Pretty much anything that Bessemer Venture Partners does has to do with space, and they're using some SPACs too. AST Space Mobile is a company that usually recently used a SPAC. So now, what is the difference between space as an industry today and Jamba Juice, a decade ago? Well, space is all about new frontiers, exploration, the unknown, interesting ways to make money by being early and hopefully having returns that are venture capital type returns of multiples of your capital. Jamba Juice, it was just basically a predictable consumer retailing type of company. It produced nothing that would make anybody question why it's being done, and even describe it as a very risky type of an investment. It was in fact a very easy to sell, predictable story. So I think in those two examples, you can see the difference between SPACs today and SPACs when they started. People wanted predictability. People didn't want anything, too out of the ordinary. They felt that, SPACs had to deliver a very riskless story. and now it's totally the opposite. Now they're willing to go to space with them. I think maybe that explains a little bit of the difference.
Okay, so basically, I think if I understand, in a very simple terms, SPACs are more accepted now than before.
Yeah,
Right.
that's a good conclusion.
Thank you, Julia, for that answering that question. Gianpaolo, would like to take your thoughts.
Yes, I mean, the structure of the SPAC is more or less the same as it always was. Now they are more mainstream because even the last of the retail investors got to know them. And as of last year, in part due to the pandemic, the fact that even retail investors were confined in their homes, and there was a lot of liquidity available and not being spent elsewhere, on top of the liquidity that arrived with the stimulus packages from different government. There's been really a ton of capital that's been funneled primarily through SPACs in the market. And I think that, contributed a little bit to the creation of a potential bubble and to a lot of the media hype that we've seen over the last year. I mean, in New York now, 85% of the securities attorneys are working only on SPACs, and they have to decline, other engagements because they simply don't have any time. So, okay, is it a new fad? I don't know. Definitely, it's a powerful arrow in the quiver, as I said. But in terms of structure, the SPACs are the same thing that they used to be, 5 years ago or even 10 years ago. Now, of course, there is a tremendous inertia because of the amount of capital behind them. But again, when there's an abundance of capital, also, like Gary said before, there's going to be even more of the discriminating power exercised by whoever is in control, sponsors and advisors. So the reality is the deals will be vetted even more thoroughly than they have been to date, because of course there is a greater responsibility, in managing greater amounts, masses of capital than before. But the nature of the SPAC is what it used to be in a nutshell.
Right. Thank you so much for sharing your perspectives about SPAC in the past and now. So Raghu, what's your thoughts about the key differences between the SPACs of the past and those of today?
Yeah, I think like Gianpaolo said, it's become mainstream. A lot of the more traditional investors and like PE companies, and of course like players, who are very well known, have gotten into it in 2020. So it's now mainstream. That's the difference. And slowly the international play is coming as well. It used to be kind of limited to the US, but now others have started. I think also the scrutiny of the SPAC transactions the regulatory process is changing a little bit, because there's so much now, as Gianpaolo was saying, that 80% of the IPOs have been SPACs recently. So it's a good place for futuristic technologies, as Julio was saying, and also technologies that require money to go in, which the traditional IPOs based on past performance may not allow. So SPACs are a good way, because there is a vetted management team and expert team that is like kind of looking to and essentially saying that this opportunity will be good, what they're picking, because based on they have a track record, but the company doesn't, and they're picking something that based on their expertise is going to be a good outcome, right? So it's really all about a lot of emphasis on the team, and then their ability to pick the right target, right? So from the target side, I think the most key thing is that you have to see you have to be ready to be a public company, right? So the governance structures, and sometimes the IPO process, if a company is not mature enough, it's one thing to have a great business plan, but to be able to navigate the becoming a public company, many of the companies aren't able to do that unless they hire the right management team that can act in the right way as a public company. So that process, to some extent here is guided by the SPAC sponsors and the SPAC management team, which already have usually the experience in navigating that process. And also the SPACs usually tend to offer a higher valuation to a target than a typical M&A, just because of the way it's structured and the fact that they're not an operating company which is coming to the table to do an M&A. So I think that gives you some leverage, but also the process though is very similar in some ways, like a reverse merger, but there is still actually a little bit more scrutiny than just a simple M&A transaction.
Wow, good. Thanks for sharing your points as well about reverse merger and the comparison to merger and acquisition as well. Great insights coming out from the speakers today. Karthik, your take, your insights about the key differences.
The Middle East is very different on the entire SPAC vehicle.
Mm-hmm.
Like the way the crowdfunding grew, the way the venture capital funding grew, and the way private equity funding grew, SPAC is one more instrument we see which brings in money into the business and brings in control and procedural governance. But Middle East has a very different way. Being an oil and a tourism destination, stock markets haven't developed significantly in this part of the world. So there are two kinds of companies. One, which have aspirations to list because of the growth and the capital requirement. And the second is companies which have the growth and would need to list on exchanges for global expansion. Now, both these companies find it a massive struggle to list on different bourses. Listing on a Saudi or a UAE exchange wouldn't give them a global acceptance, and listing on global exchanges with the dollar peg and the financial lineage coming in as a hindrance was always a challenge. So SPACs have become a very strong intermediary vehicles for them. In last 4-5 months, we have seen TriStar, we have seen Alcomi. We are now looking at oil and petroleum integrator being listed on New York and London exchanges through SPACs. So are opening up avenues for a lot of mid-size to large-size enterprises which are privately held or governed by families here for global expansion, finding a route through these SPACs. So while in some parts of the world, it's a technology boom, a startup boom, and a growth boom, here it's more of a necessity boom that companies do not see a alternative in the region and hence look up to SPACs to take them global, which otherwise would have taken a very long procedural route.
Okay, that's because my next question was why companies looking to go public are choosing SPACs over IPO, but I think I get the difference. So Gary, your take.
A Middle Eastern company coming in from a Saudi or coming in from an Iran is going to go through a massive scrutiny if it has to list on London or New York. It would take them 3 to 4 years. It would require a battery of lawyers to prove the fidelity and the documentation fiduciary control, which when a SPAC comes in with a very strong governance and transparency route, which removes all the pain points. Also, listing them in a UAE exchange would give them a 2x, 3x multiple over a period of 8 to 12 years. Because of a currency peg, there's hardly any attractiveness of the market, which, if exposed to any other global route through SPAC, gives them an instant valuation, which is what most of the companies here look for.
Great. Thank you for adding those points as well. Thank you, Karthik. Thank you. Gary, over to you, please.
Yeah, the situation, having gone through an IPO on NASDAQ, I can tell you it's a long, arduous process. So it's about the speed. I mean, it's just a lot easier to do, with a lot less, I almost said with a BS. I'm going to say it anyhow. It's just, so it's just change and it's acceptable. And it just, anyhow, that's it. I mean, it's just keep it simple, stupid. That's it. And why are people doing it? Because it's easier to get out. I did an IPO with the Click Software. It took us about 9 months of going through the process to do it. Maybe longer than that. Maybe it's 12 months, but a long time. So that's it. And, time is money and the world's changing very quickly. You got to get these things put together and out and done. So it's interesting. It's new. Sometimes when people first get in these kind of markets, things happen that shouldn't happen, right? Companies come out just like IPOs that shouldn't. But in all, it's a great idea.
Good, great. Thanks, Gary, for sharing that as well. I mean, that's why people should choose SPAC over IPOs, I guess. Thank you so much. I have another question. So again, another round of questions. Sorry to Julio again. Just start with, how big is the SPAC phenomenon right now, as of now in 2021? And also, I mean, it's big, but I think John Paulo said could be a fad, but who knows? And what are the potential concerns about the amount of viable targets for new SPACs to pursue in 2021? So there are two questions. How big is the SPAC phenomenon right now in 2021? And the potential concerns about the amount of viable targets?
Well, the figure that I looked up said that there's $80 billion right now that have been raised, but one of the speakers, I think it was Karthik, said it's closer to 100 billion right now. So somewhere between 80 and 100 billion of cash has been raised and is sitting somewhere waiting to be deployed through a SPAC, right? So that's how big it is. That's pretty big.
That's pretty big.
You know, this decade has seen the introduction of the trillion into everyday parlance. We never used to speak trillions, and so maybe today when you say 80 billion or 100 billion, and maybe it sounds a little smaller, but the reality is that 80 to 100 billion is literally thousands of companies. I mean, it's more than hundreds of companies. It's thousands of companies that you are talking about that potentially are going to be listed. It's something that is good for the stock exchanges because, prior to all of this that we were talking about, the trend was to go private. The trend was, due to all that red tape that Gary and others have described, the oversight, the red tape, the BS, companies were in fact opting to go private again, to forget about public markets. And so the trend was that public markets were losing market share. They were losing companies. They were losing listings. SPACs have now made it possible for them to regain that, to have several IPOs a week, which when we grew up is what was happening, many IPOs per week. And for a while, that started drying up. So we have a large pool of capital looking for acquisitions. That brings you to your second question. That brings us to your second question of, are there enough companies out there to successfully deploy this kind of money and give everybody involved a nice return for their money? And that never happens. I mean, people are going to make mistakes. People are going to get carried away. People are going to start paying higher valuations than they should, and a lot of companies are going to not be able to sustain those expectations. And because they are now liquid, you might expect pretty quick exits from those investments, and a lot of downward price pressure when those companies are unable for one reason or another to achieve their objectives. So it's unpredictable, but at the end of the day, it's something exciting. It's something that gives us a great excuse to get together and meet and talk to you. And so we really need to be looking at at how the market evolves. If in 2 or 3 years, instead of 80 to 100 billion of SPAC money, you have more, then that shows that this was a very welcome development, and that SPACs have done well, and therefore the concept is able to continue to raise capital. So it's a little early to say. There's going to be mistakes, and certainly people shouldn't just buy a SPAC company just because it's available. That's really all we can say. It's what we've learned as investors over time. Always be careful, but welcome innovation and welcome new ways and try and participate them. Right? It's a little bit like Bitcoin. You brought up blockchain. You ought to own some of it, right? It's now out there. It's got enough of a capitalization. It almost makes no sense to not have some of your cash invested in Bitcoin, because you need to participate in whatever is interesting. So have some cash in or some investments in SPACs make sense, but don't overdo it just now. Wait and see. Time is money, but patience is usually rewarded as well.
Thank you so much for making that awareness to our viewers as well, because don't put all your eggs into one basket. I mean, Bitcoin obviously, has evolved, blockchain has evolved, cryptocurrencies have evolved as well, and so do SPAC has. But again, rightly said by Julio, just be careful and do your own homework before you invest into a SPAC. Gianpaolo, your turn now. The same question, please.
Can you repeat the question, because I didn't hear you when you pronounced your words before?
So there are two questions in one. So how big is this SPAC phenomenon as of now? That's number one. And what are potential concerns? What are the concerns about the amount of viable targets for this new SPAC, which is going to get pursued in 2021?
Well, I wouldn't elaborate about the size of the SPACs market, because my colleagues have just given the recent figures and they're accurate. I could only perhaps mention that we had, a small hiccup, or we will see if it's just a hiccup in the system between February and March this year, and whether or not this is a signal of a cooling off or is just a temporary bump. Again, time will tell. In terms of scarcity of targets, there are many targets, in the United States at the moment, and also many targets internationally. And obviously, that other markets outside the United States are preparing SPACs or SPACs equivalent type of vehicle on their own regulated market. So I can only see this as a growing instrument in the corporate finance realm. If I had to speak, and of course we're not here to propose anyone any investment, it's just for educational purposes, but I would say that definitely you have to get into a SPAC, try to get in as quickly as possible, as near as possible to the $10 starting value, because from there onwards you may have a good ride. Even if you exit soon enough, you can really come up with a hefty bounty. If you're a retail investor, obviously institutional investors and more sophisticated investors have a variety of strategies that they can employ. But I think the targets, there's always targets out in the market for those that can identify what a target is. And I think the markets actually thrive on the differences of opinions among the investors. Otherwise, if there were no difference of opinions, we would not even have a stock exchange to begin with, because that's how stock exchange were born. I thought black and you thought white, and we were ready to place our bets according to our view of the companies, a view of the investments, view of the commodities, view of the world. So I think in this context, the SPACs are a very good vehicle, very attuned to the contemporary times, and again, if we're talking about retail investors, caution is always important. Yeah. I like to remind everyone that the current chair of the SEC, recently, just as of last year, alerted the market as, the lack of performance, a post-merger of over 2/3 of the SPACs. So, this is to say decoded that, people that were in the SPAC from day one, and the sponsor for sure, and all the personalities that have been advertising and promoting the SPACs in different ways, shapes, and forms, definitely made a lot of money. Not necessarily the investors that have remained, with the SPAC post combination. And this is always important to remember, because of course, the weakest investors have to be protected. Obviously, they have little recourse if something goes sour.
That's a word of caution. Thank you so much, Gianpaolo, for that. Karthik, over to you, please.
So size of the market, size of a financial market / a trading market is never finite. It always grows and it grows rapidly. Now, what size of the market does SPAC occupy or take? It's only going to depend on the success that it brings in, the viability that it brings in. But considering the fact that it's a bridge finance route primarily between an investor and a target, the margin of error is absolutely limited. And I would draw an analogy to what a retail investor pursues or perceives a mutual fund investment to be. A mutual fund investment in his mind is a de-risk route to investing in markets. And exactly the same way for an investor in this space also, it's supposed to be a very de-risked route into the business. And hence, due diligence into the kind of targets that the businesses acquire, exactly how a fund manager is supposed to do a due diligence on his investments, is the way one would need to. While there is a recent boom in the industry at the moment with far too many targets and far too much dollar on the sidelines, if the due diligence process is truncated and is jeopardized, maybe 2 years, 3 years down the line, this boom is necessarily going to turn into a bust. With the valuations not supporting at the moment, I would throw a caution. Let's see certain multiples. Let's see some success stories of the valuations coming in at any point in time, and then maybe invest. But that also brings in a fact that the businesses that I represent are a little conservative and a little old school in terms of his investment. So I would have a varied view on this.
Thank you so much, Karthik, for sharing your views here. Next, I have Raghu. I think Raghu, I haven't.
Yeah, in terms of the size that you mentioned, last year, 2021, we are just one quarter in, but 2020, the largest SPAC, $4 billion SPAC from Pershing happened, and also largest average number is about 380 million or something like that. So the size of the SPACs have also been growing, and of course, as we mentioned, somewhere around 100 billion is sitting there now. So I think the SPAC vehicle will evolve more now that it's become mainstream in terms of the kind of companies, both from target as well as the launches. I think the key issue with for the investor is that I think the SPAC sponsors are no doubt doing very well, because for them the liquidity happens pretty soon. Whatever it is, the 6-month lockout period, and as long as they manage that, they have a pretty good leverage on what they bring in. For the investor, there is a little level of de-risking, as I think Karthik was mentioning, because they can redeem at any time, right? So to some extent, their thing is protected, unlike like a private investment. So it's they have a little bit of liquidity, and they still get to kind of bet their horses, if you will. So that part is different than other kinds of investments in private vehicles, or even directly into IPO companies, because here, for whatever it is, 18 months, you actually get some rate of return, and you can actually pull it out if you want it. So that part is, I think, different. I think it will evolve into specific kind of companies that are suitable both from target as well as launches. That's where I see it going, but it's there to stay.
Yeah, sure. Thank you so much for sharing your views, Raghu. Really great insights. I'm loving it. Gary, over to you now.
Yes. So it's estimated, Goldman Sachs said that the SPACs could generate $700 billion in acquisition activities over the next 2 years. And, but the other challenge is they also estimate, and this is recent, within the last 2 months, there's $103 billion in SPAC capital looking for acquisition targets. What does that mean? That means those acquisition companies are going to have multiple offers, and so the prices are going to go up. I mean, keep it simple, stupid. So, there's a lot of activity, a lot of interest, but at the same time, when you start having this much interest, from my opinion, I think the value of the SPACs could be affected. So what I would be doing if I was a SPAC, I would be looking at things like artificial intelligence, cybersecurity, quantum computing. I'd be thinking differently. I'd be thinking out of the box on this thing, from my perspective.
Okay. Thank you, Gary. It was quick and fast. So I think we just have a few more minutes before we wrap up the show, the VCTV show for the week. So so basically, if I'm a private startup and looking to go public, so is SPAC my favorite route as opposed to IPO because of the reasons that we just discussed? And is it easier for me to first as a private startup? So Julio, let's just take that question with some closing remarks for the week, for the show, for the topic, and we wrap up the show.
Thank you. It's been great to be here. In answer to the specific question, of course, if you are in a company right now and SPACs are knocking on your door, and they say that over 20-25 SPACs are announcing every week.
Yeah.
So you got a lot of suitors. Of course, you're going to answer their calling. You're going to listen to what they say. SPACs are very flexible. You know, with SPACs you can cash out a little easier than in other situations. You can figure out earnouts. You can you can really tailor the deal, especially when you have 2 or 3 different suitors. Then there's competition, and then you can play them one against the other. And you absolutely should do that. So right now, while the going is hot, you should try and get as much as you can out of it. And there's really no reason not to. We just hope that some of these new trends stay, because they're making things exciting. And while we're still sitting at home, at least we have something exciting going on out there that we can discuss, so that when we go back to the office, we're already public. Anyway, it's been a pleasure to be here, and certainly we can continue the discussion anytime. In fact, we should have this panel again in a few months and see where we are, because I guarantee there's going to be something more to add that either we missed or we predicted. So thanks again for having me.
Thank you. Sure. And I love that when you go back to office, we are already public. Thank you so much for adding that on. Gianpaolo, over to you, please.
Well, I mean, I tend to really agree with what Gary said a while ago regarding the potential risks for the investors, in participating in ventures where valuations have been hyperinflated as a result of the extreme competition in the market. And it's always a signal that things might overeat, and you don't want to be, an investor in something that it's overeating, because, your investment capital might be partially or totally at risk. I definitely agree that it's time for the SPAC industry as a whole to begin and look for alternative, out-of-the-box industry sectors as promising clusters of targets, and in order to maintain the palatability of the instrument and containing the accretion of the capital from the system. Otherwise, a potential incident may result in a cooling off of this market. I mean, not in the extinction of the species, obviously, but in a cooling off that may affect, as we have seen so many times in the financial industry before, for even up to 1 or 2 years of the segment. And why should that happen if sponsors, managers, and leaders are, a little bit more creative and flexible? So I think, there's a moment now to analyze different targets in Industry 4.0, and also in different geographies, in order to diversify and hedge against obvious risks. Thank you all again. This is Gianpaolo Parigi. You can find me on LinkedIn, Twitter, or on my email at gianpaoloparigi1@gmail.com. Thank you very much for having me here tonight.
Thank you, Gianpaolo, for joining us again on this episode of VCTV, and have a great weekend. And let's move to Karthik very quickly.
Thank you so much. From a startup's point of view, I think there's nothing for them to lose in terms of the time that they would require, the effort they would require, the documentation, the legal hassles that they would need to go onto the bourses and list themselves, versus going through a SPAC. I think it's a far easier deal. But it's not going to be that easy. It's rather the SPACs who would have to go looking out for the startups and not the other way around. unfortunately, because there are far too many startups that will be trying to marry few SPACs available in the region. So it's going to be natural selection in the end. And again, the success is going to be purely basis what valuations they provide to each other. And as Gary mentioned, are the SPACs eager and aggressive to get into sectors which would create certain valuations in future that makes the entire industry or the entire business attractive enough. So yeah, it's I would say it's a space that everybody would watch in. We're not there, so we would still continue to watch. In terms of being on the show, I think it's always been a pleasure. It's my 100th episode with all of you today. So it only gets better from here. Thank you so much for hosting me once again.
Thank you, Karthik. 100th episode on VCTV. Thank you for making that. Raghu, over to you, please.
Yeah, I think I echo what some other panelists have been saying. I think it is evolving because it'll get diversified globally, and certain types of sectors. I think it will make sense in the long run. But I think we will just see it evolve into specific areas to differentiate it from the traditional IPO. And so I can be found on LinkedIn at Raghu S. Rao, and I'm looking forward to, especially in some areas like the cybersecurity and data protection and biotech. I think there's a lot of opportunities because of what SPAC has created.
Right. Wow. So thank you so much, Raghu. Artificial intelligence, biotech. Thank you so much. And yeah, let's move on to our last speaker, but not least, Gary.
Okay, great. So, I mean, it's a great opportunity for the startups. It gives them the next level, and not even startups. I want to say growth stage companies, because really startups aren't really the targets. But growth stage companies really takes them to the next level, allows the public to really invest in them, and allows them to get credibility, an incredible amount of credibility and visibility. So it's just a game changer. It's a new level, and it allows them to be able to jump to that level very quickly. So I'm excited about it. It's whenever you have this isn't new, right? It's not like it's new. It's just repackaged in a bit different. But it's easier to do, allows them to get further along, and allows people to be able to invest. It's a great thing. It's a great time. As always, look at the management team, look at the companies they're acquiring, make sure they're kind of companies that would normally invest in. Don't get involved in, don't look at the hype, really look at the fundamentals. And if you do that, you'll be successful with it. So you can reach me, Gary Fowler, on LinkedIn. You can see me on Twitter. I've got a couple of shows. Check it out. It's great being here in VCTV. Congratulations, Karthik. I feel like it's family hour again. This is the therapy session for the pandemic. VCTV. Come in with your friends.
Very nice. Very nice.
Thank you all for your participation today. Again, it's a congratulations, Karthik. You're the runner-up after Gary. So you have to beat Gary now. I hope you do.
Yeah, Karthik.
Gary is the guru.
I don't know the guru, but like 600 of these later. I feel like a veteran. I told my wife I feel like I'm glued to my seat.
Oh gosh. Thank you so much for making this panel very informative. Besides having fun, always Gary says keep smiling. Whatever it is going around, you just keep smiling. And thank you, Julio. As you rightly said, we might be speaking about this topic. We should be, and probably there'll be more development in the space. And we're going to be having you, and hope I can have you on our Singapore panel, like on the Asia timing as well. And so having said that, thank you so much, Raghu, Gianpaolo, Karthik, Gary again, and Julio again for joining me on this episode of VCTV. And have a good weekend. And I'll catch you again on Monday. Till then, stay happy.